Hello guys, welcome back to another video. So today we're going to be looking at the Alephium ecosystem. We have a lot of updates that we can look at and basically going over, kind of how the Alephium ecosystem is expanding quite a lot lately, what it means for the price, how the mining side is affecting it, and all of that stuff. So firstly, we'll start with this tweet. It just kind of shows, what's being built on Alephium right now. So this is all to do with smart contracts and other decentralized apps that are on Alephium right now. So you have ayin, which is an exchange, Candy Swap, Alph Bank, Swapper, Alephium Finance, Links OTC, Squirrel, Hold Alph. So these are all DeFi platforms, and we can have a little look here. So Alph Bank is borrowing against your Alephium. These are relatively new, but the first one obviously being ayin Swap, that has been on the market or on the scene since the start. And the rest of them are just coming along now between the past probably 6 months. That's when they've all kind of been built on here. And then you have NFT and marketplaces, GameFi, which you see here, social stuff, utility tools, launch pads, data indexing. It'll be linked in the description. So you can click through all of these. If you just click on here, you can see it brings it to Alph Swapper. And this is a really good start to Alephium's whole ecosystem that's being built. We're seeing certain kind of copies of things that we see on Ethereum or on Solana, meme coins that are coming out as well that we're seeing potential for, and it kind of is mirroring the start of Solana and Ethereum. So it's a good sign for Alephium, especially with how quick the network is, and it's also proof of work, so kind of out competing Ethereum and Solana on the technical side as well. And then we have a new update coming in, which is the Oracle, now available on mainnet. So oracles would allow app builders to build all sorts of things that weren't possible before. So if you don't know what an oracle is, I would kind of explain it like it's an API. So you actually can scrape data from something and use it in your own kind of chain. But it says here, oracles are like bridges for smart contracts. They bring real world data like token prices onto the chain, and they allow smart contracts to make decisions based on the events happening. Normally what happens is smart contracts or anything that's built on it only has access to information on the chain. So it has to be put on the chain before you can do anything kind of with that information. Oracles are basically going to be allowing you to gain information from outside sources, whether it be CoinMarketCap, stuff like that. And they're doing it in tandem with DIA, Cross-Chain Oracle. It has now integrated its Oracle infrastructure into Alephium. Two main kinds of oracles are available, and these will allow them to do things that we previously thought were hard or impossible. So price feed oracles, as I just said, these provide real-time price assets, absolutely key for DeFi, and the market product delivers accurate and real-time data prices for tokens like Alephium USDT, WBTC, and ETH. And then you have randomness oracles. So these generate true randomness, which is essential for fair games, lotteries, and all things GameFi, maybe even gambling in the future if that does have a place on the Alephium network. It does say a lot about more what oracles are. So there are some challenges with it, as it says here, particularly ones reliant on single sources, can be vulnerable to security threats, incorrect or manipulated data. So if you take data from something and it doesn't necessarily verified by a second source, like an average price or something like that, then it could be open to manipulated data. How they work: oracles fetch data, process it if necessary, and relay it to the smart contract on the blockchain. The smart contract then executes based on this data. So it's a very simple overview of what it is. As I said, kind of how an API functions, where you can, access that, take information from there, use it in your own program type of thing. But this allows you to have data from various different places that you can use on your smart contracts. And obviously this is going to tie into what we're seeing here. A lot of these would be able to use this. A lot of these DApps that we're seeing here would be able to use this. ayin Swap would probably be the most right now, just because it has so many coins. If we go to stats, maybe you can see you have alph, USDT, all of these, so you can gain stats for them in real time. It would be a lot better to gain stats for Ethereum and stuff like that. So hopefully this allows developers to be more creative on the network and introduce more into the ecosystem. And then when we look at Alephium's price right now, I know the chart hasn't been great for a while. It's kind of been a little bit of an up and down thing. And this is for the past 3 months. It got up to around $2.20, came all the way down to around $1, dipped slightly below it, and then came up to $2.20 again. And now it's going down kind of the same way that we're seeing it go down here. I don't know if it's going to get to $1 or not. It is also very dependent on the whole cryptocurrency market at this time. If you look here, and we just go by market cap, you can see Bitcoin's down to 58,000. So it's kind of following on that, as are most cryptocurrencies. So we can't really, put it against any cryptocurrency. Just because Bitcoin is going down in price doesn't necessarily mean that your cryptocurrency is bad. It just means that, there's a way bigger market and this is only a really, really small piece of the pie. And therefore it's down in price because of Bitcoin. But hopefully we see a nice decoupling from Bitcoin at some point for Alephium. But historically, not a lot of coins can decouple from Bitcoin's price actions. And then on the mining side, as we can see here, Hashrate has increased around double in the past month, I'd say. So already up to 3.1 petahash. That's climbing, more Alephium miners coming online. And we can see the transactions are also starting to ramp up a little bit. Circulating supply is at 42%. I think I'd like to see maybe a little bit quicker of an emission schedule, just because Casper Coin had that really quick emission schedule and it worked out. But they can't change it now, so there's not really much point. But for miners right now, they have the Bitmain coming online. I know we had that pseudo 51% attack on the network that subsequently kind of moved over to Radiant being the problem there. That hash rate has now definitely been cut out by all these ASIC miners coming online. Previously, I believe they held over 400 terahash on the network, and now it's up to 3 petahash. But they also could have taken that money and bought miners, so I'm not really sure where that entity stands on mining Alephium anymore. But they have said that they partnered up with Radiant, so it's kind of Radiant's problem at the moment. We do have ASICs for Alephium, and they are starting to come online, as you can see in the hash rate. And hopefully the price kind of follows this hash rate this time. So the main thing about price following hash rate is that miners are investing money into machines. So there's already, some kind of conviction for the coin. And then most likely a lot of them are going to hold on to the coin and pay it out of pocket, which in turn is going to decrease the supply there's actually out there on the market, therefore increasing the demand. So economically, price should follow hash rate, but it obviously doesn't always work, just because you have things like Bitcoin that can tank off and everyone starts to sell the rest of the coins. I don't necessarily know why this is. I have a theory that it's kind of a lot of bot trading that's going on. So as soon as Bitcoin dips below, all the other altcoins start to sell off because the bots are saying, look, Bitcoin's dropped. We need to cover these losses in Bitcoin by selling off the rest of the other coins. Maybe that's just a theory, but I'm sure some smarter people out there have done some research onto how actually that happens. It might just be that everyone sells off their cryptocurrency when Bitcoin drops down. But for the most part, we haven't really dropped too far. At 58,000, I still think we can recover and hopefully see Bitcoin's price go up soon. And that would be good for the whole market. Alephium, Casper Coin, all these coins that we've been mining and have mined in the past, they'll obviously follow that price appreciation. But I still want to see how it works out with the hash rate. If we have another doubling in hash rate without the price moving, I might start to get scared. However, right now we know that it's just because Bitcoin's down at the moment. So let me know your thoughts on the Alephium ecosystem. If you've used any of these dApps that we're seeing here, which ones you kind of have the most conviction in taking off. And if you have any other ideas for dApps, please leave them in the comments below. Make sure you like the video and subscribe for more content like this.